Didn't want to make this video, but here we are. This is the Apex 50K to payout challenge, but I blew the account. Why did I blow the account? How did I do that? Was it over leveraging? We'll get into that. So I'm okay with it. It's fine. It's a learning lesson, and we're going to take that and move forward. Yeah, I can just show you real quick. If we're logging into our Tradebait, I can move this real quick. We can see the account up here. Nothing. There's nothing down here. If I go into my PA Apex account, there's nothing. So it's gone. It's okay. It's fine. Not gonna let it get to me. I'm just gonna learn from my mistakes and move on. So where did I go wrong? All right, let's learn from that. Where I went wrong was I got caught up in wanting the money. I got caught up in oversizing and over leveraging in market orders, trying to get money rather than focusing on a strategy. I wasn't entering trades with a take profit and stop loss. I was just hoping. One of the biggest things for me in trading is to not trade out of hope. You should trade out of respect to your strategy, because if you're trading out of hope, you are more so on the gambling side. But if you trade in respect to your rules and your strategy, then you're following a system. So if you look back on my videos, the first couple days are lower amounts and I'm following my strategy. And then you start to see these big spikes. Well, for you it would be like this. And that's kind of where things started to get out of control. I started to disrespect the rules, disrespect my strategy, started to take a lot of trades during the day, and yeah, lost the account. It's fine. Again, I'm not going to let it ruin what my goal is here. Not going to let it ruin everything about it. And yeah, we're going to move forward. So where did I go wrong? Well, I went wrong. It was, let's see, it was right here. So one of the biggest rules that I would break a lot was trading. I'm on Pacific time, so would be trading after 9 a.m. and that would be going into lunch hour. Why do I not want to do that? Because, well, it gets slow. We don't want to do that. We want to trade this whole area right here. Right? Right here, this is 6:30, so 9:30 open till about, where's this? 10:30. We want to trade this. You can see there's a lot of volume right here. And then where is this? This is like right around, 9. It's just like, it's in this sideways zone. Same for this day right here. We can see 6:30 right here, or 7:30. Where is it? Yeah, 6:30 till about 10:30, 9, tops out. And then it just kind of like it goes sideways. Sideways, sideways, sideways. It's hard to catch a trade right there. So what my focus is going to be now is to try to catch a trade near market open. And for me, what I see personally is typically on market open, market swings down and then it likes to come back up. So for instance, at least for me on this chart, market open is between the yellow green, and the blue. So it's going to be like right in here. So market open, you can see London comes down into New York, and New York comes up. London comes down into New York, New York comes up. London comes down to New York, and New York comes up. Blah, blah, blah. Same thing over and over and over. We could look at any of them. London came up because it wanted to take out this high, but then what happened? It came down. So even if I'm trading near the open, I would still be able to utilize what the market's telling me to catch the trades. And so that's what I'll be looking for. You can see market even came up to try to test this high. But there was so much chop right here that for it to take out the entire high, it was kind of unlikely. There was this fair value gap right here. It probably tapped into this right here. Yeah, it basically tapped into the gap and went down. So that's that. How will I be trading this? Well, let's just use, I don't know, this one for example. Okay, let's say it's 6:30 right here. 6:30, market opens. We're going to look for a 1 minute fair value gap. So I'm just going to go to the 1 minute, and whatever first one pops up on this is what we're going to look for. We're not going to look at today because today's already happened. We're going to look backwards. So right here, we can see market came down, swept the low, came back up into New York. So if we zoom in, I wonder if I can replay it to right here. Okay, here we go. We're going to do a replay right to here. Ah, shit, you stupid son of a bitch. Whatever. So we are going to, in hindsight, be on our charts waiting for market to sweep the lows and respecting these 1 minute fair value gaps. Right? And so once this happens and price respects the fair value gap, keep in mind we want to wait for price to have a market structure shift back towards the upside. Okay? And while we're doing this, we want to wait for market to sweep whatever low it wants to take out before heading back up. So we can see that market came down, it's sweeping some lows right here. Here's another low, and here's a different low. You get the point. So market came down, hit some of these lows, low, low, and I guess right here it decided to turn around. Why right there? Well, we can see that it's the internal low right here. There's two highs and high and high and a low and low. So, and there's like this mini fair value gap. So it's just like, it's a general spot for it to turn around. So jumping back to the 1 minute, once price turned around, we're going to wait for an entry on the 1 minute gap that it creates. So there's the gap that it created on the way down. Price took down and took out the draws on liquidity. It's turning around. Okay, it took out this high. It's taking out this high. It took out this high with this candle, and it just broke through the fair value gap with buyer strength. So when we see that, we will place our order to take out the high right here. We will put our stop loss right there. And if anything, we can put, yeah, that would be it because there's no draws on liquidity any higher. So that would be that. And that's going to be the main focus. We're not going to try to overcomplicate it. We're going to take that one trade And if the market decides to present us with another trade, which would be like this one down and this one down, that'd be it. We're not going to overcomplicate it. That's all we're going to do. We're going to have good risk management. We're going to respect the swing up, and that's it. We're not going to get caught up. It's not a hard system to follow. We can even see that this morning. Right now it's 7:35. We can say the same thing happened. Same exact thing. You could have done it either way. You could have caught this fair value gap right here, which I don't really recommend because it's below this whole trend, this upwards trend. So this one would have been better because it's on the downwards trend. So once you break above that, see how you're above, then it's kind of like a break of structure, a shift in the trend. Whereas if you break above this, right, break above this, it's kind of like, it's true, but then again, you have this trend down, right? You come up, down, up. It could be a manipulation to still keep going lower. Whereas if you just have this, you came down, and then you broke above the fair value gap, and then see how you're bouncing on it. I don't know. To each their own at that one. But yeah, just like I said previously, we're going to wait for this fair value gap, wait for the market to sweep the draws on liquidity below. We were going to put our entry right at the high, targeting the DOLs above. Putting our stop loss at the low, typically, the previous low, and that's it. That's all you have to do. We can check for any other draws on liquidity above, but that's basically it. You take that one trade, and the rest is history. 1 to 2 trades a day. Right here, you just need the one. Don't overcomplicate it, and call it good. So, moving forward, I know this video is getting a little long, but oh my gosh. But moving forward, re-evaluating the rules, staying disciplined, maintaining patience in the market, having good risk management, not over leveraging, accepting a loss on the day, all that stuff. And even remembering to have a long-term outlook on this. You're not getting rich tomorrow, the next day, the next month, all that stuff is important, because you can get caught up in trying to score big wins, trying to chase missed trade entries. Yeah, it's important. One of the biggest things is to have a goal each day, and if you meet that, great, and if you don't, it's fine, move on to tomorrow. One of the biggest things that I like to mark out is, we'll just say $300 a day will equal $1,500 a month. Whoa. Right? So if you can do between $200 and $400, even if you get a $100 trade, it's fine. $1,500 a month, which is, oh no, it's $1,500 a week, which is 6,000 a month. Okay. So in hindsight, all you have to do is follow the and So what do you have to do? You have to follow the system, stay disciplined by following your rules. When you do all these things and you catch these little trades a day, it will add up, right? Once you start to slip, looking for these bigger trades, that's when you start to make mistakes. So that's what I'm going to try to do. I'm going to try to look for these smaller wins, the trades that will give me a couple bucks a day and will make me appreciate the strategy, appreciate the journey, and put me back on a path for success. And for those of you who stuck around for the entire video, appreciate it. Appreciate you listening to me. And yeah, if you're also on the same journey, just know we will get there. It's fine. Don't let this get to you, because it's the same for anything in life, any sport, any activity, anything. There's ups and downs. You can't be a pro in the first day or the first month. So just learn from the mistakes and move on. All right, well, I'm going to get on with my day. Just wanted to put this out there. And let's get it.